Good afternoon, everyone. Welcome to the 8th Career Talk series of webinars from CFA Emirates. Today's session is about financial modeling best practices delivered by Ian Schnoor. Before I go on further about myself, I have 25 years of experience as a banker, auditor, finance director, entrepreneur, and financial trainer. And I spend most of my time as a keynote speaker, columnist, and podcaster, as a host of the Real Finance Mentor podcast. And of course, very importantly, as an active volunteer on the board of CFA Society Emirates, where I'm the Career Services Chair. I'm a chartered accountant, a CFA charter holder, and I hold a level 7 qualification from the Institute of Leadership and Management in coaching and mentoring. So that's about me, the moderator, Binod Shankar. Let's talk about, next slide, please. I want to talk briefly about CFA Emirates and what we do and how we add value. So the agenda for today would be about talking about CFA Emirates, introduce you to the speaker and the topic, and then Ian will take over, and then we'll have a Q&A session at the end. Please keep your mics and cameras off, and please do ask your questions if you have any on the chat box as usual. And at the end of this session, we will try and answer as many questions as possible. This is a 1.5 hour session. It's not the usual 1 hour webinar. So we will have some time. We will try to devote some time to the Q&A towards the end. Yeah. Next slide, please. Right, so about CFA Emirates, we do quite a few things here. We try to add member value. We have educational events. We also have quite a few career support initiatives that I will talk about later. And we also hold quite a lot of events relating to, to add value to the members. Next slide, please. Specifically on career services, what we do here, quite a few things. The first is the CFA Research Challenge, the Investment Research Challenge, which is actually quite useful for people upskilling and giving them employability skills. We actually won, the UAE actually won the, we actually got to the stage EMEA finals this year for the first time ever in our history. And it's a very fantastic competition for anyone in the university trying to look for a career in investments, equity valuation, etc. We also have a career center, which is a CFA Institute's career center, to be honest. It's a portal with lots of resources and of course a job portal. And we have been actively trying to encourage members and candidates to register themselves, create a profile so that they can be more visible to employers worldwide who also are trying to get onto the portal. It's one of the value-add services we provide. We also, of course, have tied up for financial modeling collaborations, tied up for financial modeling collaboration with 2 different bodies. One is CFI, and you must have got an email last month, Corporate Finance Institute. Now, CFI is a provider of high quality online financial modeling courses. And we found them to be quite appropriate in terms of value for money. And they're offering significant discounts to our members and candidates, as you have seen in the emails. So that's one initiative. The second initiative is, of course, with the organization that Ian represents, FMI, Financial Modeling Institute, which is based in Canada. And what FMI does, which again, we've announced last week through a collaboration email that you must have got. What FMI does actually is provide high quality, rigorous financial modeling focused exams. And they have 3 levels, the AFM, the CFM, and the Master Financial Modeler. Although right now we are talking about 2 different, two levels, the first and second. And today is the deadline actually for the registration for the next exam on 24th of October, 2020 for both levels that they're offering. Now, CFI and FMI, I have to emphasize, are 2 different entities, of course, but also have very 2 different focuses. CFI is you can say is a financial modeling training provider. And FMI is almost like a exam provider or exam body. And hence, there's a complementarity in the services they provide. That's why we brought both of them to yourself, yeah. We also have, of course, quite a few other initiatives in terms of webinars, as you know. Since April, we have had 8 webinars in the Career Talk series, and we hope to have more at the rate of at least 2 every month, focusing on a mix of technical as well as behavioral competencies. Today's session is, of course, technical skills. And we, of course, we have also updated and upgraded our communication to members via our career emails, which happens once every 3 weeks, which talks about resources, links, webinar recordings, etc., etc. That's what we do. That's what we do at Career Services at CFA Emirates. Next slide, please.
Oh, that was.
So today's presenter basically introduce you to the topic and the presenter. The webinar overview. I mean, financial modelers are often self-taught and left to figure things out on their own, often wondering if it's a better way. Ian Schnoor will review a better way, and he will present and discuss some critical tools required to build a best-in-class financial model. The key learning outcomes for today would be the discipline of financial modeling, top 10 modeling best practices, key modeling tips, skills to check a financial model, and some great modeling technical skills. About the speaker, Ian actually is a CFA charter holder, apart from being a whiz at financial modeling. He's a principal and founder of the Marquee Group, a leading provider of financial modeling training to professionals in the financial community. He's also the executive director of the Financial Modeling Institute. Now, Ian has taught thousands of business professionals and university students in Canada, the US, the UK, Australia, and Mexico. He's very passionate about teaching, and he also teaches at Queen's University. He's a past recipient of the Instructor of the Year Award in the Master of Finance program at the Smith School of Business. Prior to establishing the Marquee Group, Ian spent a number of years in investment banking departments at Citigroup and BMO Capital Markets. So he's been there and done that. So he comes with a practitioner's perspective, which is very important. Ian, of course, has completed Bachelor's of Commerce honors degree with academic distinction. And as I mentioned, he's also a CFA charter holder. Now, Ian and his colleague Julian are now speaking from Canada, where I've been told, Ian, the temperature is a very mild 23 degrees compared to the boiling hot 41 degrees in Dubai right now. Exactly. So very good place to be right now. Thank you once again, Ian, for helming this show. The session will be recorded and will be available on YouTube within a week of today. And I said, if you have any questions, please post in chat box and I will go through them and moderate at the end in the Q&A session. With those few words, over to you, Ian.
Okay, excellent. Thank you, Binod, for your generous introduction. Can you hear me okay? You can tell me? Okay, excellent. Listen, welcome everyone. Good evening. It's really great to see all of you. When I turn my head like this, I can see your names off to the side of the screen. There's a great number of you attending, and I'm excited to be here today with my colleague Julian to go very quickly through a presentation we put together on financial modeling best practices. What I'm going to do is start with just a little bit of additional background on why we're here and how this works, and a couple acts of clarification. First of all, yes, it is 23 degrees in Toronto. That's hot by our standards here right now, but yeah, we're having a very nice day here. It sounds like it's a little bit warmer where you guys are. And I would also mention that Binod mentioned that today was the deadline. Today is the deadline, Binod, for the early bird pricing. You can register up to the exam. I'm going to talk more about that. The exam you can register up until late September. The next exam is October 24th, but today is the deadline, early deadline for the early bird. But CFA members, anyone who's attending this presentation also has a 40% discount, which you're welcome to use as well. And I'll talk about that more. So let me just back up for a second. I'm going to spend about 5 minutes on some introductory comments and we're going to jump right in, guys. So as Binod mentioned, I did get my start in capital markets, in investment banking. I worked in Toronto and New York at BMO and at Citibank, doing a lot of traditional mergers and acquisitions work and financing work for big companies. And I always enjoyed modeling. Modeling was one of my favorite topics. I always loved being the guy that got a chance to build financial models, but nobody trained us. Nobody showed us what to do. You were left to figure it out on your own. And around 18 years ago, time has gone very quickly, I left investment banking and I started this business called the Marquee Group. And the Marquee Group is a training firm. We are focused on classroom training. Most of our training is in North America, but we have run training courses all over the world. Last year I was out training, running some courses in Malaysia and in Pakistan. I actually was in the Emirates for the first time last year. I had a bunch of meetings in Abu Dhabi and Dubai. In fact, maybe you can see my Abu Dhabi Starbucks mug. I'm disappointed that they ran out of Dubai mugs, but at least I have my Abu Dhabi mug here. And I loved it. And I hope to be back in person. So through this business, the Marquee Group, we run training. But what occurred to us many years ago is that everyone was taking our courses, and then they would put on their CV or on their resume that they attended a Marquee Group course. Or they would take people took any training course, and maybe you guys have done that yourself, took a training course, and then on your resume, you would indicate you took that course in financial modeling. And that's because there's no global accreditation. There was no global certification. And a lot of senior bankers would come to us and they would say, is this person any good? They tell us that they took your course. And all we could say is, I have no idea. I don't know if anyone is good just by taking a course, because we didn't test them. And no training firm runs rigorous testing. So what we did is we wanted to form an independent body. So we worked together with some other organizations around the world, and we created this body called the Financial Modeling Institute. I'm not going to spend much time talking about it here today, but there are a number of slides here at the very back. If you go, I'm just going to the back of the slides. You're going to get sent this, by the way. All these slides are going to get sent to you after the presentation ends. The last 5 or 10 slides provide an overview of the Financial Modeling Institute, talk about what we do, how it works, the discipline. But essentially, as Binod said very well, we are purely involved in testing and accreditation. There is no training from the FMI. It is very important to keep separate training from accreditation. Think of the FMI like the CFA Institute, just for financial modeling. And I will tell you that the CFA Institute has been very, very supportive of the Financial Modeling Institute. They've invited us to a number of their conferences, and they've encouraged us to work with lots of societies, which is why we're working with the Emirates Society. And we've been delivering this presentation for, over a dozen societies around the world, and people have found it very, very helpful. So we are a body. Here it talks about that just provides the very, very rigorous, challenging accreditation in financial modeling. If you want to know more about the exams, please feel free to email myself. My email address is here, and we can definitely have a chat if you want to learn more about that. But that's a little bit about what we are doing. And in the interest of helping people prepare for modeling exams and to help people become better at modeling generally, we put together this webinar series, and this is the first presentation in this series. It's called Financial Modeling Best Practices. I will also tell you that the CFA, we've become very close with the CFA Institute, and the CFA Institute has told us that the number one request, or maybe one of the top requests of candidates around the world for the CFA, is candidates tell the CFA Institute that they would like the CFA Institute to include modeling in the CFA curriculum. And so the CFA Institute knows that modeling is extremely important, but it doesn't really fit within the CFA curriculum to include modeling, which is why the Institute has been very, very pleased to encourage people who are interested in modeling to look at examination through the Financial Modeling Institute. There are a number of training firms around the world that offer some testing. Like, I understand you have a partnership with CFI. It's a very nice training firm. They have lots of great online courses, and they do a little bit of some testing at the end. It's not rigorous testing in the same way that the FMI is. We offer 4-hour intense testing to show that you can truly build a financial model. And that's the purpose and the distinction between them. So what I want to do now is get into our grid. And as Binod said, it is 1:15. I'm going to speak fairly quickly for approximately 1 hour. I'm going to go through some financial modeling best practices. In fact, I'm going to start with some introductory comments. I've got about 10 minutes of introductory comments, and then I'm going to jump right into what I call my top 10 list. Top 10 financial modeling best practices. And I'm going to promise you right now that if you can try to incorporate most of these best practices in your own financial models, your own models will start to immediately become much more powerful and much more effective than they were previously. I've also included some slides at the back. I won't have a chance to get through this because of time, but I've included a bunch of slides on technical skills and checking models. I might have chance at the end to show you a couple of them, but this is included in your book. And then as I already showed you, there's a bunch of slides that talk about the Financial Modeling Institute. You can read those on your own at the back, okay? So that's how we're gonna work through here today. I'll go about an hour and then leave around the last 10, 15 minutes for questions. If anyone wants to stick around after, you're welcome if you have more questions. And also, please remember the session is being recorded. So if I'm going quickly and you wanna watch something again, you're welcome to come back and check out the presentation after. Finally, as part of this presentation, I will be showing you some PowerPoint slides, and I will be taking some notes and also showing you a financial model. All of those resources are going to be sent to you after the presentation, okay? So you're going to have all of my materials are going to get sent to you because you've attended today, okay? So that's kind of where we are at. So on that note, I'm just kind of exiting this mode, and I'm going to go down into here. I'm going to go down, and just because I'm going to be jumping back and forth between my presentation and the Excel in just a moment, okay? So let's jump through here, and I'm going to start off on slide here. Oops, and it says financial modeling is a discipline. And I got to tell you, people don't always think that way, but I strongly believe that financial modeling is its own discipline. In the same way that accounting is a discipline and finance is a discipline. Financial modeling, I believe, is becoming more and more prominent and has become much more of an important skill set over the last 5, 10, 15 years. And we're going to focus on some great skills and tips to improve your discipline in this area. So let's start here. On the next slide, it says, what is a financial model? And that might be an obvious question to some of you, but I'll tell you, I asked this question. I have taught, through our training business, I have taught courses on financial modeling to thousands and thousands of people for close to 20 years. I always love asking this question because people come up with different views, different thoughts on what modeling means. But what I want to do is give you a couple of high-level thoughts, and then we'll talk about how this works here. So I'm going to jump into my Excel notes, and again, I will make these available to you when the session is done. But if anyone ever says to you, what is a financial model? It's very simple. It's one word, in fact. If anyone ever says to you, what's a financial model? It's simply a forecast. That's it. All we're trying to do is we are forecasting a company's financial statements into the future. That's it, full stop. How far in the future? Typically 5 to 10 years is normal. Some people go longer, some people go a bit shorter, but fundamentally all we're trying to do is build a forecast of a company's financial statements, their income statement, cash flow statement, and balance sheet. And why do we do that? Why do we do that? Well, I will tell you that financial models have become easily the most important decision-making tool in all of finance. That's why we do this. The reason we forecast is because we make some of the most critical decisions in all of finance are made based on our financial models. So, of course, what types of decisions are we making? Well, there's lots. And most people immediately think of valuation decisions, and we do. We make all sorts of decisions around valuation. Is a stock being priced too high in the market? Or what about a private company? What's the appropriate value of that business? And so we use our models for valuation purposes. We use our models, though, for a lot of other things as well. We use our models to make credit decisions. We use our models to evaluate risk and volatility. We use our models to make decisions about operational decisions. Maybe many of you work at companies and you are using your models to make decisions about operational issues, budgeting, planning. People use their models for M&A decisions, for LBO decisions. The point is, all sorts of models are being used. Just wondering if that was being noticed, someone who put this green line here in the middle of my screen. That was not me, but it looks nice. The point is, we are using our financial models for all sorts of things to make critical financial decisions. So it sounds really simple, guys. It sounds very, very simple. All we're trying to do is take a company's historical financials and forecast them into the future. Well, let me go back to my slides then for a second here. It sounds simple, but the problem is that most financial models are a mess. Most financial models don't work very well. And maybe some of you can relate to this. And this is what I want to then talk therefore about today, is most financial models that we encounter, I've looked at hundreds and thousands of models. And the problem is most models don't work very well. They're sloppy, they're messy, and they're very difficult to use to make optimal decisions. So why is that? Why is it that models are often hard to understand, hard to use? Well, I believe it's because people have often not been taught the right way. They haven't been given a set of steps, a discipline to build models in a very elegant, clean, organized fashion. And so if we look in the middle here, we can see, I mentioned this earlier, modeling is very much a multidisciplinary skill set. To be a good financial modeler, you have to have a lot of different skills. Starting on the top left here, if you can see my mouse, with some Excel skills. Today, I'm going to show you a few Excel skills, but there are lots. In some of our courses, we talk about all sorts of Excel tools and skills that are important to build financial models. I'll go through a few of them today. I will also spend a fair bit of time today talking about this second idea, design. I'm going to tell you right now, the number one reason why financial models fail and why they don't work very well is because of poor design. When a model is not well designed and not well planned, it makes it very difficult to use. We're going to focus on some ideas around design and structure. We have to understand accounting and finance. I've had a lot of people tell me that their accounting skills became much better after they started doing financial modeling. I don't have an accounting designation myself. You don't need to be an accountant to build models, but you need to understand the integration of a set of financial statements. You need to understand intuitively how a certain cost item might flow through the income statement, and then how it hits the cash flow, and how it hits the balance sheet through inventory, and then impacts working capital. We have to understand and see how everything comes together. And then, of course, finance are the pieces we need in our models to help us make effective decisions. So where I'm going with this is as follows. These are the skills we need, and I want to now leave you with two key criteria here. How do we know if a financial model is working well? How do we know here if a financial model is working well? Well, I'm going to ask you to do this, guys. When this session is done today, go back and look at any financial model that you've ever looked at or that you've built. And we always talk about this in our training courses, and we always say that a good financial model needs to work in two different ways. A good financial model has to work in two different ways. And if your model works in both of these ways, it will probably be an effective model. If it doesn't, then it likely isn't going to work as well as it could. So what are the two ways that a good financial model needs to work? Number one, we always tell people that a good financial model needs to work well electronically. Let me spell that properly for you, electronically. What does it mean? What does it mean if I say a good model has to work well electronically? Well, it means this. Guys, let's pretend that Binod was my boss or Binod was my client, and he asked me to build a financial model for him. If I build a model for him or for any of you, and I email it to you, and I emailed you the financial model, and you opened it up on your computer in Excel, when you start clicking through the formulas, within 5 minutes, you should start to feel like, yeah, this makes sense. I understand all of Ian's formulas. I understand what he's doing. And if you work through it, you will understand every single formula. Every formula makes sense, and it's clear, and it's understandable. Has this ever happened to you? Guys, can you relate to this? Has it ever happened to you where you opened up a spreadsheet, you didn't build it, and you opened it up, and you clicked on a cell, and the formula was so long that it wrapped around and around and around? Have you ever seen a formula like that before in a financial model or in any Excel spreadsheet? Well, let me tell you, don't be impressed by that. That's not impressive. That's very difficult for a senior financial professionals, for your clients to understand that. So we need to stay away from that. And in one of my latter tips today, I'm going to show you how to avoid that, how to avoid huge, giant formulas, because they're not optimal. They're often filled with mistakes. They're very hard to read and understand. We've got to keep it simple. And number two, when I tell you that a good financial model needs to work in two different ways, I say that it needs to work well electronically. And the second criteria is going to sound a little bit strange in today's day and age, but I would tell you that a good model needs to work well on paper, meaning you can print it out, or because we're doing everything remotely these days, or as a PDF. A good model needs to work well as a PDF deck or on paper. You should be able to print it out. And why is that? It's because most senior professionals are still making decisions by looking at a printout on paper or as a PDF. Most senior professionals are not going to open up an Excel spreadsheet, start playing with it in order to make the right financial decisions. So decision makers want to see it this way. And I will tell you as well, not only decision makers want to see it, but if you've built a PowerPoint presentation, very often people want to attach the model at the back as an attachment and let people read it. Let me show you, I'm going to spend some time today reviewing a financial model with you, but I'm going to first show you what that financial model looks like as a PDF. And again, I'm not sure whoever put this green line on, if it's possible to take it off, that would be great. If not, we will just live with this green squiggly line here on the screen. But let me show you here what I'm talking about. I'm going to show you in a few minutes a model called the Henderson Manufacturing Model. And we're going to go through it together in Excel. But I want to first show you what it looks like as a PDF. So imagine, please, you were my boss, okay? And imagine I sent you the PDF version, or I showed you a printout on paper. Here's what it looks like. If I was to print it out for you on paper, and hopefully you can see it like this. Normally it would not have a green line on it, just ignore that. But what we see here is a cover page. And as I quickly flip through it, I'm going to go through it very fast. What I want you to appreciate is as I flip through this model, it feels like a bit of a presentation. Take a look. I have a summary page, and then I have some inputs and assumptions. I'm going to go through the order in a moment. But the key I want to point out is that there's a title on every page. I have headers. I have footers. What you'll notice is all the numbers are the same size. Everything is consistent. It feels like a bit of a presentation. Here's my income statement, my cash flow statement, my balance sheet. Very often when we run a modeling course, people will say to us, by the way, did you build this model in PowerPoint? No, of course not. This comes right out of Excel just like this, but it feels clean. And this creates a lot of confidence for readers. And so let's go back to our notes then. And therefore what I really want to say is this, and you don't hear this very often. A good model needs to tell a story. Guys, a financial model needs to be the best storytelling tool that you have. It needs to tell a story. I'm going to say your boss / client needs to be able to read it like a presentation. Because if they can do that, they will truly be able to understand the situation and make an effective decision. By the way, if you truly want to take a course and learn how to build effective financial models, there's a lot of training firms out there. I'm just going to want to point out one slide in the deck very quickly here that you can see. I mentioned earlier that the Financial Modeling Institute is only involved in testing. But on the very last slide, you can take a look on your own. There are approximately 25 firms around the world. These are all training firms. These are all training firms around the world that provide training to help people improve their modeling skills. And they've all been certified by the FMI, that their training helps people prepare for the exams. If any of you ever use, let's say, Kaplan to help prepare for the CFA exams, this is similar. These firms help you prepare for the FMI exams. And so you don't need to take training if you don't want to before the exam, but these are all organizations that will help you learn to build effective financial models. And you can see it at the back. So as I go back into my slides here, guys, as I go back into the slides for a second, we can see here what it says is that on the next page, a good model needs to be a powerful communication tool so that you can use it to make effective decisions. And here are some important attributes you can see on the screen. A good model has to be dynamic and flexible and intuitive, right? Dynamic means you can update it easily, make changes to it easily. And so these are things we're trying to do to ensure our models are as strong as possible. When it does that, it creates enormous credibility for your users and your readers. And that's what we're trying to achieve. You know, a lot of people think that modeling is a skill set where you sit in a corner and you work on Excel for hours and hours and hours. That's only partly true. A good model needs to also have the communication aspect to communicate all your ideas in a very powerful way. We need to keep things simple. Da Vinci said that simplicity is the ultimate sophistication, and that's what we are striving for in our models. So I want to talk about a couple of basics on this slide and then move into our best practices. So on our basics page, I already said keep it simple. What does that mean? Well, I've been talking about it. It means simple formulas, simple design. That's what's going to allow people to understand what we're doing. You can use complex ideas, but when we use complex ideas, we have to distill them and articulate them in a very clean, organized way, which I will share with you momentarily. If we are going to have a powerful model, though, we need to make sure we avoid this trap. We need to make sure we avoid this issue that says never, ever hard code. Never hard code a value into a formula, meaning we never want to build formulas that look like this. Can you guys see my screen there? I'm sure you've all seen this before. Maybe you've even done it before. We never want to see a formula that says something like this. It says equals A5 multiplied by 0.025 plus 4.9. Because these two values are hard codes, the 4.9, the 0.25. What exactly do they mean? I have no idea. It probably means your boss told you late at night that there was going to be a 4.9 million increase to a certain cost. So instead of entering it as its own cell, you plug the number right into a formula. This is a disaster. Nobody knows it's there. Nobody knows how to find it or what it means. So we must avoid that. This formula should only ever say equals A5 times, let's say, A6 plus A7. Every single value has to be in its own cell and then linked into a formula. So let's make sure we avoid this at all costs to ensure that things are working. I'll talk more about that when we get into our tips. So on that note, then, I'm going to flip into the next page, and the rest of our presentation for the next 45 minutes here is going to focus on what I call, and again, from my close to 20 years teaching financial modeling, we've put together what we consider to be some of the best tips and practices to achieve really powerful, strong financial models. I'm going to go through them, and again, it'll take approximately 45 minutes now to go through all of these very quickly. And then once we are done, I will make sure we save some time for questions. If I don't get to your questions at the end, we will take all your questions and send back the responses to the CFA Society afterwards, okay? So let's start with this. It says, in terms of some key best practices, I will tell you that tips number 1 and 2 might be some of the most important tips I can share with you. They're not technical at all, but what it says is when you want to build a financial model, it is absolutely critical to plan and design the model and use it to ask the right questions. I will tell you right now, there's a very common misconception. I mentioned this earlier, that financial modeling is a skill set where you just sit in the corner all day working on Excel. That's actually not true. So I'm going to give you a rule of thumb, a general rule of thumb that says when building a model, how much of your time, people ask me this all the time, how much of your time will be actually working in Excel? What percentage of your time will be spent in the model, building the model, playing with the model? Some people think it's 90, 95, 100%. That's not true. For a good model and a model builder, I will say rule of thumb, somewhere between 50% to 60%, maybe only 40%. but approximately half of your time will be spent in Excel building, working on the model. The rest is not working in Excel at all. So what are you doing? You're getting very smart. You're talking to people. You're asking good questions. The financial model builder is usually one of the most important people in a whole project because you're interacting. You're the center point, the very focal point of the whole project. Everything else flows through the financial model. So you become the real hub of activity. And because the financial model has to capture everything. The rest of your time is spent asking questions, talking to your boss, talking to your client, reviewing the model, presenting it, getting feedback, and refining it based on all the feedback that you have received. So as a starting point, the very first thing we need to do, and there's a page on this which follows right afterwards, it says the planning process. And it says here, it is critical to properly plan and design a model before it can be built. The planning process allows you to sit down and say, what's the purpose of this model? What actually are we building this model for? And therefore, what assumptions do I need? How much detail do I need? Think about the issue, build a plan, ask a lot of good questions. Some of them may seem obvious, but many of them will not. I'll tell you that in our firm, we call this a scoping document. We always create a scoping document, and the scoping document lays out exactly what the model is going to look like. You know, another way to think of a financial model, guys, a financial model is really just a virtual representation of a business. You're taking a physical business and building a financial model of that business. So as an example, when I was in Dubai last year, I enjoyed spending a bunch of time in the Dubai Mall. It was pretty amazing. Loved walking around. It's a spectacular physical model. It's a spectacular physical accomplishment that someone created that. Well, obviously, if you were working on the team many years ago that was going to build the Dubai Mall, the first thing you would have done is you would have built a plan. There are all sorts of blueprints and architectural plans on the Dubai Mall. Nobody just showed up at that site one day and started building the mall. Obviously, they had a strong blueprint, a strong plan. But I will tell you, if you were asked to build a financial model of the Dubai Mall, that would actually, I would love one day to build a financial model of the Dubai Mall, to understand all the rental income and the other income that they get and all the costs. A lot of people, if they had to build a model for the mall, would not build a plan. Well, if you had to build a physical model, you would have built a plan, but people often lose sight of it. They don't bother when it comes to a financial representation of the physical model. So we're going to create a strong scoping document. It only takes an hour, half an hour, but it will save you lots of time at the end. And I will tell you that there are 3 steps to strong model planning here. There are 3 steps to planning and designing an effective, to building a strong plan. And they're listed here in the middle of this page that says the planning process. So number 1, I would say it's critical to identify the major issues. I'm going to jot that down. I'm going to say, let's lay out the major issues, often called, guys, the key drivers. People will often call this the key drivers for the particular business. And so what does it mean? What does it mean to have key drivers? Well, I will tell you that these are the most critical, most important assumptions going into the model. And why are these the most critical, important assumptions? It's because they're hard to forecast and hard to control. Very tough to forecast, very tough to control by the management, by the owners of the asset. And as a result, we are therefore going to want, because they're hard to control, we will want multiple options. We're going to want multiple options for these variables. These are very often things like, I will tell you, these key drivers, because they're beyond our control, these are often, they're often economic issues like inflation rates, or they might be things like commodity prices, exchange rates, things like that. Things that I have a hard time controlling. So for instance, let's imagine I bought the Dubai Mall and I owned the entire mall. And I was building a forecast to know how the mall was going to perform in the future. Well, one of the things that would be very concerning to me as the owner of a mall might be on the occupancy, the sales volume, the demand. Are the stores always full? Are the stores always full? So that's going to be driven by economic concerns. It will be driven by things like online sales. But obviously, if the economy is really going downhill, then people, a lot of the tenants might leave the mall and stop paying me rent. So things like, these will often include things like selling prices. It can be occupancy rates, which is things like sales volumes. You get the idea. And I will tell you right now as well, that most companies, and I have personally, I've probably built 100 models in the last 10, 15 years. I will tell you that most companies have 3 to 5 key drivers. There are not 20 or 30 key drivers per company. We have a handful. And your job as the model builder, guys, is to do some thinking and figure out what are those critical issues so you can identify them. And then I'm going to show you how we're going to incorporate them in the model. The second part of the planning process is to make a list of all the other inputs and assumptions needed. Make a big list. Make a big list of all the inputs and assumptions that you want to build your model. So you can see here it says step 2, identify all the assumptions that need to be made to forecast this particular business. That's going to include things like the revenue assumptions. But I'm also going to want to understand the cost assumptions. Things like, are there raw material costs? How about labor costs? What about energy costs? Selling, marketing costs? If I'm the person building the financial model, I have to understand all of these elements so I can include them in the forecast. What else will I want to understand as the model builder? I'm going to want to understand things like their fixed assets. What is the depreciation rates? What's the depreciation method that the company uses to depreciate their assets? And how much do they spend, or are they projected to spend on buying new assets every year, new CapEx? For instance, if I purchase the Dubai Mall, I might have to invest in capital expenditures every year. We might need to replace parts of the roof every year, or the floor might wear out, or the escalators and elevators may need to be refurbished and repaired. Those are capital costs, and I will need to understand that about my business. I will want to understand things like the debt and equity assumptions. What are the interest rates on the pieces of debt? Do they pay a dividend? Debt repayment timing. I need to understand all of this in order to properly build the model. I need to understand the working capital. I need to understand income taxes. And so my point is, think about every element of the business. I will tell you here, the model builder often becomes the smartest person. I'm not even kidding. The financial model builder often becomes the most insightful and the smartest person in the room about the project, about the company, because you're the person who had to understand and pull together all the information from different places. Now, I want to leave you with a critical idea here before we move on to the next point, and that's this. People say to me all the time, how do I get these assumptions? Where do I get the data from? Someone will say to me, I'm not an expert in mining companies or in real estate companies or in malls. How do I come up with all the assumptions? Well, I want to leave you with an important piece of information to give you a lot of assurance. It's not your job as the model builder to invent the assumptions, okay? That's really critical. Guys, I believe that I could build a financial model for any company in the world. And I believe you could too. You could build a model for any company in the world. You do not need to be the expert in that particular company because you are always going to surround yourself with people who understand the assets. If I was hired to build a model for Dubai Mall, I'm not going to build it all by myself. I need a bunch of people to talk to. I'm going to speak to the various managers at the mall, the owners. I'm going to do research on what's happening with real estate, with malls in different countries, and I will pull together the data. So there's a slide here in our deck that says, it's after the planning process, that says information gathering. Your job as a model builder is to identify what information you want and then go get it. I'm not an economist. I'm not going to forecast exchange rates or commodity prices, but I'll do some research. I'll find a bank economist that does and maybe use their data and make sure my boss and my client are comfortable with that. So take a read of this page to understand our job is to be in the middle and go find the data, research the data. You will become very smart over time on the asset, but initially it's not your job. I have no idea what kind of capital expenditure requirements the Dubai Mall needs, but I will ask the question and I will get the information I want. And then finally, the last part in the planning process right here says, identify the required schedules and components. What this means really is, I'm going to put a note that says, plan out the model on paper. I'm going to say here, pretend it's a PowerPoint presentation. Think about what the model will look like when it's finished. What slides will you want? As an example, guys, I'm sure some of you build PowerPoint presentations occasionally. And when you build PowerPoint, what's the first thing you ever do when you have to build a PowerPoint? Well, the first thing most people do is they build their table of contents. They think about what is going to be on every page. And then they might even lay out all the pages. A consultant will say that they're going to storyboard it and think about what the message is on every page. We need to do the exact same thing with our models. Because if you do, I'm going to go back to the model here. Oh, thank you for taking off the green marker. If you do that, if you think about what the model will look like, then after you build it, once again, it will feel like this. You will never end up with a model that looks and feels like a presentation if you just randomly start building it. But if you've planned it and thought about the order and the design, it will start to come together in a very nice, professional, polished way. And so that's why the planning is so critical. So let's go back to our notes here. I'm going to show you where I'm at. I'm on the top 10 tips, and we've now covered the first 2. Do not take this for granted. It is so critical. Insert yourself. Be the most valuable portion of the project by being the smartest person in the room about the opportunity. You're not just some person sitting in a corner. You're the focal point of the entire project, but only if you engage in these steps, okay? So I have this list in my Excel spreadsheet as well. I'm going to show them. I have the same top 10 tips right here, just so I don't have to jump back and forth as much, but we've now talked about the first 2. I'm going to jump through the next 3 are going to take about 15 minutes. And then the last 15 minutes, I'm going to spend on the final 5 tips as well until you have a real sense for what does it mean to build an effective model. Here's one. I'm going to cover point 3 and 4 together. It says, keep the assumptions up front and then make them blue, right? We're going to talk about that in a moment. But before I get to points 3 and 4, I want to share with you a note about optimal model flow. What's the optimal flow of a model? What's the right way, right, to the ideal order? Now, I will tell you that there is no perfect answer. There's no perfect answer to this. Each model, each project might require a slightly different order, a slightly different process. But I'm going to tell you an order that's really important that often works the way people think. And as you saw from the model that I showed you, I strongly recommend that you begin all your models with a cover page. This might sound silly and it might sound obvious, but I will tell you right now that 90% of the models that we ever look at do not have a cover page. Here it is. Here's our cover page on the Henderson model. It takes 5 minutes to make it, but the power of this page is it tells your reader that this is much more than just a bunch of random calculated numbers. To you, this is a financial presentation, and it puts that presentation lens on it. And what should you include? I'll tell you here, the cover page, right, makes it feel like a financial presentation. So it's not just a bunch of random numbers all over the place. What should you include? Well, include things on the cover, like whatever you need. Include logos. You could include the company name, put on dates, whatever you like, whatever you need and like to make sure that it is clear is going to be included on the cover. Now, I want to show you a really nice, powerful Excel tip here for a second. And if we take a look at the model, I'm now showing you the model in Excel. You're seeing the cover tab. This is the cover sheet. The only thing on this sheet is the cover. We can see here I've got my company name. I've got a logo. I've got some other information for it, but it's got a date. And the date is today's date, August 31st. Hard to believe, isn't it, that we are already at the end of August? How's that possible? Feels like COVID hit about 2 weeks ago and the last 6 months have been a blur, but anyway, it is what it is. We are apparently the end of August, and I want to show you now a great way to automate that, because very often in financial models, guys, people want to automate their date. So if you want to automate a date on the cover, there are only two ways in Excel. And many of you probably know this feature in Excel. It's called, there's a great feature in Excel called equals today. You've probably heard of that, with an open bracket and a closed bracket. If I was to do that, watch, if I was to say equals today and press enter, it pulls out today's date. There's one other way. There's only one other way in Excel to automate a date, and that's by using a great feature called equals now. This one is less common, and the now function also includes the time. Okay, so the now function will include the date and the time. These features in Excel are called volatile functions because they update themselves automatically. But if you want to have a nice model and you want the date to update every day, because every day you're going to print a new version, then you can use one of these features. So I'm thinking about flow. I'm thinking about presentation of my model. So the first thing I will show someone is the cover page. The second thing, and I don't care what model you're building, guys. We've built hundreds of models at our firm, and I've personally built a lot. I would strongly encourage that the next thing you should always include in any financial model ever is an executive summary. And I know that also sounds obvious, but I will tell you 90% of the models that we ever look at do not include an executive summary. So here I have it right up front. It says summary outputs. In the Excel file, I actually have a separate tab for it. Here I have a separate tab that says summary. You can see that here. And I have I've got some revenue forecast, EBITDA, net income, whatever it is, under a base, a best, and a worst case. But let's talk about why. And it should be obvious to you, I hope, although many people never build this. Why do we do this? This is the first thing your client will want to know. The very first thing your client will always want to know is, what's the answer? If you get hired to build a financial model and then you're going to present it to your client 2 weeks later, the first thing they're going to say is, what's the answer? What's the answer to this particular model, to this particular problem? And I want to be prepared to say, sure, let me show you the answer. It's right up front. If you don't have an executive summary, then the client has to start flipping and flipping through the model, usually to the very back, to find it. So it's nice to include it right up front. And I will tell you, this must be customized for every model. Every model you ever build would have a customized executive summary. I would say the only thing you should include on your executive summary is include whatever your client needs to see to make their decision. So this will often be things like, might be a revenue forecast, could be an EBITDA forecast, it could be valuation outputs, could be IRRs, could be credit stats, I'll put etc. My point is, you will know exactly what you need to show the client if you did a good job planning. Because when you plan, you understand the purpose and you understand what you need to present. This sounds painfully obvious, but it's amazing how often we are in a situation where a client looks at a model, there's no executive summary, or the information that they want is not there, which means the model builder didn't do a very good job thinking, planning, and understanding the needs of the client. That would be the second step. Now, the third part is really critical, right? So I've said here, include an executive summary. Oh, I'm sorry. The last thing I will mention here on the executive summary is it's the last thing you will build. It's the very last thing you cannot build it until the end. It's the last thing you will build, but the first thing the client wants to see. So that's critical to include it. In the same way you do in a PowerPoint, think the same way here. But this gets me to the next tip, which is sometimes has been a bit of an issue for some people. I would strongly encourage you as the next element to include the inputs and assumptions. And you can see here in our model, after the executive summary, I have a tab here that's got the assumptions. Does everyone see here? It just says include the assumptions. All of the assumptions are listed up front. I have my general assumptions. I have some pricing assumptions here, all of the operating costs. I've got my depreciation assumptions, etc. Debt and interest assumptions. I've got assumptions on my capital expenditure forecast. They're all collected here up front. So let me ask you the first question, which is why? So why is this the next thing? Why is this next? Well, I have seen this 100 times, and I don't care what you're modeling. This is the way people think. I promise you that after looking at the answer, the next thing the client always wants to know every single time is, and I can hear you, even though I can't hear you, I'm pretending I can hear you because I know you're saying it, is they want to know, how did you get there? How did you get there? They'll say, that's interesting. They'll say, these are very interesting outputs you got, the revenue forecast, EBITDA forecast, but then the client wants to know, how did you get there? What decisions did you make about growth rates, about commodity prices, about exchange rates, etc.? How did you get there? And in so many models, I will tell you that we look at hundreds of models that have no assumption page. There is no assumption page. So if the assumptions are not upfront, where are they? Well, I will tell you, if the user did not put them all up front here and there's no assumption page, then the assumptions live everywhere. Oh, thank you for the arrow. The assumptions live everywhere throughout the model. They live all the way down on the model. There are some calculations and there are inputs. The problem with that is it's very difficult. It's very difficult for the client and the reader to understand the model if the assumptions are buried in all the formulas, if they're included on every row of the model. I want to tell a story, and the best way is to show the reader the answer and then how did I get there. Now you'll notice here that it is, you'll notice there that we make them a different color, and blue is the industry standard. So what are some common model colors? Well, of course, so inputs, we typically make blue. I will show you here that this is typical model blue here, whereas formulas tend to be black. So calculations and formulas in a model tend to be black, inputs blue. And that is so the user, if you're the client or the boss and you go into the model, you will know immediately which are the cells that you can play with, which ones you can change, and which ones are going to calculate all by themselves. And so very important, very critical to distinguish with colors the difference. Even if you go to the model tab, you can see here, I have historical data. And my historical data is also blue because those are data inputs as well. Your client will realize that those are not calculations, it's dead actual data. So those numbers we make blue as well. And that way it's clear to everyone what's going on. So let's come back here. I want to now show you one really powerful Excel tip. And many of you probably have not seen this tip before. So I'm going to go through a nice technical skill. I got to tell you that having taught for many, many years, thousands of people, most people immediately agree with this idea. Most people will immediately say, yeah, you know what? This makes sense. I understand that. It makes a lot of sense to include my assumptions right up front so it's easy to update the model and easy for my client to understand. people will say to me, gosh, I never did that before, so I'm going to start doing that. And I really hope that you do this. I promise you it makes it much easier to read. But I'm going to tell you, every once in a while, someone will say to me, they'll say to me, you know, Ian, here's why I don't do that. Here's why I don't. Someone will say, here's why I don't like putting the inputs, right up front. What they like to do is, instead of having the capital expenditure forecast entered right here as an input, they'll say to me that they want to do that right on the model. So I'm going to go to the cash flow statement, because of course you know that the cash flow statement is where the capital expenditure lives. You can see in my model, my capital expenditure forecast is just a link. I'm just repeating, I'm grabbing the assumption from upfront. Some people say to me that they actually want to enter. You see what I'm doing? They actually want to enter the numbers right here. Why is that? Because what they'll say to me is they like to enter the assumptions right in the model so they can see what's changing in the answers. Let me show you what I'm talking about. If I change my capital expenditure forecast on the cash flow statement, that actually might reduce net income on the income statement. Why, you might ask? Why is the CapEx going to reduce net income? Well, if you have more capital expenditures, you might need to borrow a lot more debt. And if you have more debt, you will have a much higher interest expense. So someone might say to me, if the capital expenditure was negative, let's just do this. Let's say it was negative 100. They'll say, if I enter negative 100 here, I can immediately see what that's going to do to my answer, to the net income. And if I put that in, you'll say, yeah, okay, good. Net income dropped from 30 to 27. And that's what they like. They like being able to make a change and see what that does to an output. What they'll say to me is, if they change the CapEx right here, watch this. If I make the capital expenditure 100 right up front, then people will say, that's great, I changed it, but I have no idea what that did to the answer. So now I have to go back, every time go back and forth and go look and see, aha, yeah, they feel like they're always jumping back and forth. I get that. I understand that. I can relate to that. And because of that, I want to show you a great skill to get the best of both worlds. How do you make sure you can enter your assumptions right here? Let me go back to my 16. How do you make sure you can get your assumptions entered right up front to communicate clearly, but also see the answers as you're changing it? Well, there's a great feature in Excel you may not have heard of before under the formula menu called the watch window. This is not new. It's been here for many years, but up until recently, guys, the watch window was buried. It was not visible. You had to go to your tools options menu to activate it. Up a couple of years ago, they added the watch window right to the menu, so everyone thought it was a brand new tool, but it's not. Look what it does. It's very simple. You click on the watch window button, and it says watch window. It says, what do you want to watch? Basically, you can watch any cell calculation on any sheet. So I'm going to say add a watch. I'm going to say add a watch, and then I'm going to go to my model sheet, and I'm going to highlight all 5 net incomes. Sorry, here, I got to do that. I had to move my box out of the way. I'm going to go to my model sheet, and I'm going to select the 5 net income cells, and I'm going to click add. And now, of course, what happens here is if I go back to, it's disappeared for a second. Here it is. If I go back into the window, you can see I have a watch window, and it's actually looking at these 5 cells. These are the 5 net income cells. And of course, the beauty is, if I change anything up here on the assumptions, let's pretend I make my capital expenditure 100. Watch what happens, please, in the watch window when I press enter. Each one of these numbers dropped. So now I have the best of both worlds. I have made a change to my assumptions. I can keep all the assumptions together, but very clearly, we can see what that's going to do to the answers. So this is just an example of a skill you can use to make sure your model is clean, organized, and keep all of your data inputs together. So I've now talked about points 3 and 4. I said keep the assumptions up front. It communicates much more clearly. And let's make them blue so we know what we're talking about. The next tip here is going to take 5 or 6 minutes, and then I will quickly blast through the last 5, which are faster to go through, to give you some ideas, and then you're going to play with them on your own when you get sent the model. Tip number 5, so critical, is it says build a scenarios page in the model. And let's go back to my notes. In my last notes, I was telling you the optimal model flow, the order that will be helpful for your client to read a model. I told you that it's nice to start with a cover page and then to have an executive summary and then inputs and assumptions. By the way, let's add one more comment on the inputs and assumptions section here. Let's add one more comment that says, use the watch window in Excel to watch outputs as you change the various inputs. Okay, so that's a nice tool you can use, and I've added the note there. But what's the next thing that I want to include in the model? I strongly recommend the next thing you should include is a scenarios page. This is so important. I would say every model you ever build should include this. And if we take a look at the model for a second, first I'm going to show it to you as a PDF. In the PDF version, this is what the scenarios page looks like. It's right here. It's one page in this particular model. Let's go see it quickly in Excel. In Excel, it's so important that we have it on its own tab. And if I go to this tab for a second, I can see here, there's a tab called Scenarios. By the way, as I'm going back and forth between tabs, I just used my mouse. But of course, we want you to become proficient with the keyboard. There's a great keyboard shortcut. I hope most of you know it. To go back and forth, look what I'm doing. To go back and forth between your worksheets with the keyboard, that's the control and page down. Page up, control page up, or control page down. One of the tools we're going to send you, you're going to get this from the CFA Society after this webinar is over, is our favorite keyboard shortcuts in Excel. And so as I scroll down, a lot of the keyboard shortcuts that we use in our own modeling are on this sheet. It's a one-pager. You're welcome to print it out. If you can become really masterful in these tips, you will work much, much more quickly and much more efficiently. Let's take a look, though, at this scenarios page in the model itself. So in the model itself, it looks like this. It says economic and pricing scenarios, and I'll give you a hint. Look what I've got. I have 3 variables on this page. I have cost inflation, I've got sales prices, and I have sales volumes. 3 variables. Now, I gave you a hint earlier. I told you earlier when we did our planning that when we identify the major issues, I said these are the most critical and most important assumptions going into the model. So the hint I want to give you right now is this. A scenario page is really just another page of assumptions. It's one more page of assumptions, but of course, as I hope you're all realizing, these are the key drivers. These are the key drivers. These are the variables that I'm going to have a hard time forecasting. I'm going to have a hard time planning them. So I want multiple, they're hard to forecast. So I want multiple cases. I want to include multiple cases. In our model, we have a base case, we have a best case, and we have a worst case. But I need to be able to play with more than one option. And so it's really critical for the key drivers to do this. Again, if I was building a model for the Dubai Mall, one of my scenarios would be occupancy rates. What happens if the economy is good and occupancy rates are really, really low? 1%. But what if the economy is terrible and a lot of my tenants leave the mall and we have a vacancy rate of 10 or 15%? What does that do? I can't control that perfectly. So I want to run more than one case. I'm going to show you a great way quickly to build this up. Now, there are 2 Excel skills that I want to quickly point out to you. I'm not going to have a chance to demo them, but I will point them out. Let me quickly show you how to build this page because I really want everyone to look at this page on your own and focus on making it in your own models. I will tell you that step 1 is to build this big box. Step 1 is to build this large rectangle, and the numbers are blue, which of course means that these are your inputs. These are all the assumptions. You're going to speak to your boss or your client and say, what is the appropriate base case for cost inflation? What do we want to use for best case? Talk to your team, do some research, and you'll enter these values in the big box as blue inputs. But the second thing we need is we need to know which is the live case. I'm going to get there. Sorry, this is the third thing. The second thing, I'm sorry, is to put a switch in the cell. So we're going to have a cell where we put a switch, the switch is just a number 1. We literally go to a blank cell and enter a number 1 in the cell. And then as I mentioned a moment ago, the final step is to include a skinny row here. This is the skinny row. And what this row is doing is it's demonstrating the live case. Which is the one running in the model right now? Well, right now, my switch is set to 1. So the skinny row is running the base case. It's literally lifting up the base case and putting it in the skinny row. This row here is the row that runs the model. The model is based on the top row here, the skinny row. And obviously, if I was to put a 2 in my switch cell, take a look what happens. Now, the skinny row is pulling out the best case, the second option here. And this row, therefore, is going to go feed into the model. So the 2 things I want to quickly show you are how did I do that? How do I build a formula here? Because this formula has to look at the switch. And depending on what the switch says, it will pull out either the base or the best or the worst. Many people will use an if statement here. We don't recommend that. It's not optimal. If statements get very long, they can wrap around and get very clunky. So our strong recommendation to keep it really simple is to use a very powerful feature called the choose function. Let me quickly show you in the slides. As I said earlier, you are going to receive these slides. And in the slides, at the very back of the slides, guys, we included a number of, we included some model skills. There's a bunch of technical skills in the slides. And one of the skills I want you to see is on how to use Excel's choose function. It's a very simple, powerful tool. And it's much cleaner and simpler than using a big, long if statement. Look what it does. It's so simple. All it does is it says, where's your switch? In this case, my switch is D6. Where is your switch? And then where are the choices? Where are the 3 choices? 1, 2, 3. So when you put a 1 in the cell, it pulls out the first option. When you put a 2 in the cell, when you put a 2 in your switch, it pulls out the second option, this one here. And if I put a 3 in the switch, it pulls out the third option. It's very elegant, very simple. I will tell you, clients love it because it's understandable. It's really simple, but it's not well known. But I encourage you to use it in your models. The final thing is on this page is on page number, if you go further in the slides, you will see a page that says running scenarios using a switch. So take a look at this page on your own. There's a drop-down box, and that slide shows you how to use it. I don't want to leave this blue number exposed. I don't want anyone to touch this number because it doesn't mean anything. What I want my client to be able to do is open up a really nice, elegant drop-down box and be able to do this. Say, run the base case, or the best case, or the worst case. And it's much cleaner to be able to use this instead of asking someone to change the number manually. So how do you build this on? To build this drop-down switch, we need to go to the developer menu right here, developer, and then click insert. And then it's this button here called the form controls. And when I click on it, you get your cursor changes to a plus, and I can draw a simple one. And then all you need to do is follow the instructions on the slides to go to format control. It's very simple to set it up. You tell it the input range. The input range is just the range of cells, the range of text cells. And the cell link means where's the actual switch, the actual numeric switch. In this case, it would be my numeric switch D6. And once you do that, you can open it up and click on the one you want. When you click on base case, it enters a number 1 in the switch cell. When you click on best case, it enters a 2. I encourage you to play with it. And once you build it, you simply slide it on top and cover up the numeric switch so that for your boss and your client, it's much more elegant, much more interesting to play with the model by using this drop-down. Last quickly, if you don't see the developer tab here, if you don't see the developer tab, that's because you have not activated it yet. It lives in the File Options menu, File Options. And then on customize ribbon, when you go to customize ribbon, you need to put a check mark in the developer box here. By default, it's off. By default, it's off, so you must turn it on if you want to use it. And again, I did that very quickly, but you can rewatch this again, this video, if you want to slow down and see how it works. That gets me through the first 5 practices. I'm going to go quickly through the last one. I told you these ones are faster, but I want to go quickly through the last 5 takeaways. I can cover these quickly and then leave a few minutes for questions. Tip number 6 is an important one. It says, this is a recommendation. The recommendation is to once you've built your assumptions and scenarios, the next thing you're going to want to build is, are model schedules and the financial statements. And there's no optimal order, but I'll show you the order we typically use. But when you're building the schedules and statements, one recommendation that we see that's nice, this is not mandatory, is to try to keep the financial statements organized vertically. I will tell you that we have seen lots and lots of models. Has anyone seen this before? In a model, there's a separate tab for each statement. So you might have, look where my mouse is. You might have an income statement tab, and then a cash flow statement tab, and then a balance sheet tab. That's called building the model in a horizontal approach. And we actually have on the FMI website an example of a horizontal model. Let me be very clear. That's not wrong. There's nothing wrong with doing that. But I will tell you that from reviewing hundreds of models, people make more mistakes when they model that way. When you put everything on a separate sheet, you have to crisscross and always jump back and forth. And very commonly, people jump to they click on the wrong cell. When you keep things vertical, it makes it easier and cleaner to build and to minimize errors. What am I talking about? Well, you guys all know that financial statements always talk to each other. An income statement always talks to a cash flow statement, and the balance, they all talk to each other. So it's nice to keep them living together as well. Let me show you what I mean. At the bottom of every income statement is net income, right? That's my net income. It's at the bottom of every income statement for every company. Well, the cash flow statement always begins with net income. So when I go to my cash flow statement, take a look. It's a simple link. It's very easy for me to check and audit your work this way if I see it flow. It's like it's working its way down like a waterfall, falling down the page. Cash flow statement starts with net income, and a cash flow statement goes through the major sections of cash. A cash flow statement always ends with the ending cash balance in the bank account at the end of the period. Great. Well, as you probably know, the balance sheet always starts with ending cash. So when the cash flow statement ends here with ending cash, my balance sheet just picks up from where the cash flow statement left off. It's so elegant and simple for the whole thing to flow down the page, and I assure you it will minimize errors. So let me put a note here that is, in terms of the financial statements, again, you can build either vertically or horizontally. Again, vertically means most of your schedules and statements are going to be in one sheet that's vertical. Horizontal means most of your pieces will live on different sheets. I will tell you that either are acceptable, but we see less errors when we're grading the FMI exams, when we're looking at client models. We see less errors when people keep the statements and the schedules oriented vertically. Everything stays up and down in the same column. We see less errors with vertical orientation. Putting my FMI hat on, if you do the exam, in the exam, by the way, the first level of the FMI asks people to build a financial model just like this one from scratch. That's why it's a very rigorous exam. People have to build a model just like this from nothing, from a blank spreadsheet in under 4 hours. And that truly tests someone's modeling skills. And you can't use any resources, no internet, no other resources. So it truly demonstrates a skill level. If you choose to build your exam model on lots of different tabs on horizontal, that's okay. A lot of people do that in past, but as I mentioned, for clients and for minimizing errors, it might be cleaner to keep it vertical. So that is number 6. The next point that I want to share with you is 7 and 8 go together, and then 9 and 10 go together. Basically, I have 2 last major ideas before I end. Number 7 says, how do you make sure your model's working nicely? Number 7 says, don't do any work on your financial statements. That probably sounds like a silly comment, right? I'm saying do not do any work on the financial statements. What I mean by that is no big formulas. I never want to see any big formulas on the financial statements. In fact, most of the line items on the financial statements are just this. Take a look. If I go to the income statement and I click on the revenue cell, I don't want to see a big crazy formula that calculates revenue. In fact, when I put my cursor here, it's just a link. It's a beautiful, simple link because it's in the same column and it's in the same sheet. So where is it coming from? Well, if I roll up, it's really simple. It's coming from a revenue schedule. It's at the very bottom of my revenue schedule. I built a schedule to think about and calculate revenues. You build it, and then once you build it, you get to total revenue and link it into your financial statements. What about this? Cost of goods sold. There's no big formula here on the income statement. It's just, once again, a link. It's a link to a schedule. And as I go down the income statement, look, I have an assumption. That's a simple link. Another assumption is a single link. Same thing with depreciation. No big formulas, please, right here. It's just a link. Obviously, where is it coming from? Well, it must be coming from its own schedule. And as I jump down there very quickly, it's coming from a depreciation schedule. So there's a couple ideas that I like to note. We have a couple, 2 modeling sayings. I call them our sayings or our mantras. A mantra is like a saying. It's like a creed. It's so important to us that there are 2 sayings that are so important in the world of modeling. One is we say build it and then link it. Build it and then link it. What that means is first build a schedule, then link it into the financial statements. Guys, I will tell you, whenever we see big, giant formulas on the financial statements, it often means that there's a mistake and it's not working well. So we're going to build schedule. Once the schedule is built, you link it in. Build another one, link it in. That means that my income statement is so simple. It's just link. A little teeny calculation, a little tiny summary. I'm just doing a little subtraction to get my profit numbers, and then a tiny link and a tiny calculation. Look how simple it is if your boss was going to edit this and check it. And if they want to see the interest expense, they can go right to the bottom. And of course, we will have a nice schedule, a debt and interest schedule that calculates all the interest expense in the company. You build it and then you link it. So that takes me through number 7 and 8. Don't do any work on your statements. Do your work on schedules. And then very finally, simple formulas. How do we do that? We want to keep it simple. I told you earlier, I hope you never build, and I hope you never have to see huge, long wraparound formulas. I never want to see a formula. I'm going to make up something silly right now, guys. Watch this. I'm going to make up a silly nonsense calculation, but you probably have all seen something like this before in your models. Watch. Imagine someone had a silly formula. I'm going to make this up. This makes no sense. It's totally garbage, but I'm going to take a number on one sheet. I'm going to divide by a number on another sheet. I'm going to multiply by something here, whatever. I'm making up some nonsense, and I'm going to add in something here. Okay, whatever. Who cares? The point is, has anybody ever seen a formula that looks like this before? A number on one sheet, divide by a number on a different sheet, multiply by a different sheet. It's a disaster. When you look at the Henderson model, when you receive it, you will never see a formula that looks like this. This is not a good model discipline. What we do is we say build simple formulas. And the way we do that is we first repeat every single variable we're going to need. So if I'm going to build a revenue schedule and I need to understand my sales prices, watch this. First, I'm going to repeat the appropriate selling price information. I'm going to repeat another assumption, which is from my scenario page. And then look at my formula, guys. My formulas are so simple. I'm going to take to calculate my freight and warehousing cost. I have a previous, don't worry so much about what the value is. I just want you to see the formula is so simple. I've got a previous value multiplied by a growth rate, but the value's right there. Look at my net selling price. It's the gross minus the freight, but it's easy to audit because everything is right here. All the way down, everything is a repeat. I'm repeating, or I'm going to build a simple formula. Revenue is just price times volume. So if you ever see a formula that looks like this one, guys, the way to solve that and make it much more elegant is to first add a bunch of rows. Alt-IR. Alt-IR is a powerful way to insert a row. Alt-IR. I would repeat every single variable. So first, I would repeat the first one. And then I would, you can see what I'm doing here, and then I would repeat the second one. And I would label them. I would include labels right here. I would have a label and a label. And then finally, when I got to my calculation, it would say this one plus this one times this one, or whatever the formula is. So when your boss audits it, it looks like that. I know it sounds simple, but people don't do these things. If you do these things, I promise you, you will have some of the best models around. So to finish off my note here, then I told you there were two critical modeling sayings or mantras that we use. One was build it and then link it. And then the second one is repeat and link. What that means is first repeat every single assumption, and then, only then use the value in your calculations. And I promise you, if you can use these two sayings, and if you can think about some of the tips I shared with you today, and you can understand how to evaluate a model and think about these top 10 takeaways, I promise you, your models will be some of the strongest, most elegant around. And most importantly, they will allow people to feel confident and to make optimal decisions because they will be telling a tremendous story. So thank you. I apologize. I went about 10 minutes over, but there's a lot to cover. I think we still have a few minutes to cover a couple questions. And then if anyone wants to stick around after, we can do that. You can also email me directly. My email's in the slide. So Vinod, thank you for that. Do we have some questions that you want me to cover off quickly here?
Yeah, hi, thanks. Thanks, Ian, for this fast but comprehensive session. I think the key points I took from here was especially spending not more than 60% on the model itself, which I think people tend to spend about 80 to 90% on the model.
Yes.
And very little time doing what you said, which is planning and designing the model and asking the right questions. And hence ensuring you don't have the GIGO problem, right? Garbage in, garbage out.
You got it.
Which happens in many models. I like the watch window. Very cool, by the way.
Yeah, it's a cool tool. People have been using Excel for 20 years and said, I had no idea that was there.
I'm sure there are many more cool tricks up your sleeve. Well, we have a couple of questions here. I think we have time for one or two questions.
Yeah.
So the first question is from Ziad Amin. He says, if I'm a fresh graduate, what is the best way to present a portfolio of financial models to an investment bank? How to make this a competitive edge to my candidacy?
That's a great question, Ziad. You want to learn modeling. I mean, what I would say is understand this discipline. And I know I covered a lot of stuff today. It probably went very fast. Watch the video again and slow it down. But I honestly, when you're going through an interview process and you're showing someone a model, I promise you, they're going to be less focused on what the actual outputs are and less focused on what inputs you used. And they'll be much more focused on this, on the structure, on the design. If you can show someone a model that feels well designed and elegant and organized, that will create tremendous confidence. You're welcome. I mean, obviously, as I showed you, there's a lot of firms that run training courses. You'll see all their logos at the back. It's also on the FMI website. But if you just look at this Henderson model, I would encourage you, Ziad, try to build a model, try and go off and pick a company and try to build a model in this style, in using this approach. See if you can build a model using this type of a layout, this structure. And then if you want, I do agree that it is nice when you go to capital markets interviews to say, hey, I do a lot of modeling. I've done modeling and I've actually built, can I show you my model on Amazon or on Tesla or whatever company you want? And it does provide a competitive advantage, but only if the model is beautiful, only if it's well designed. Otherwise, it won't distinguish you. If you want to chat about that further, let me know. but I do applaud that you're doing that. And I think you should keep doing that. It's great.
Yeah, thanks, Ian. One question which I've also personally experienced is when Excel files get too big to open or to send. I mean, how do you prevent that? How do you manage that whole issue of bulky files?
Yeah, that's a great one. You know, we've had a great reception to these webinars on best practices. So we're going to be developing some other free webinars. And one of the ones we're thinking on doing, it takes probably an hour, is how to deal with what's called model bloat. Because sometimes, and we just dealt with this for a client of ours recently, sometimes models become huge and therefore you can't email them. And I'll tell you, usually it's not because of the volume of formulas. Usually there's some bloat or what we call garbage. There's things like phantom links or external links or names or visual charts, or there's always something that's made the file swell. And often we need to work through, or there's macros, or there's something that has caused the file size to get huge. Again, I can't do this question of justice without walking through what some of the major issues are, but I would encourage you to typically look for objects or pictures or graphs. Or another quick test to try is this. I would encourage you, as one simple test, usually the culprit lives on one sheet. So for instance, if this model was, let's say, 30 megabytes and I couldn't email it, what I often do is we'll save it as a test version. So don't do it on the real one. Save it as a test. And then one at a time, delete each sheet and save it and see if that, you might discover you'll delete one sheet, Binod, and the file will drop from 30 megabytes down to 3 megabytes. And you might scratch your head and go, that makes no sense because it was a small tab. And then you'll realize that there was some garbage on that sheet. And then we can open it up and there might just be some code that went crazy, or there might have been some links to that, or whatever it was that was causing the issue. So start with doing that. Again, we have a lot of tips that we can share, but that's one to help you identify what's causing the root of the problem.
One more question, Ian. To what extent can we use data connections to create models, as sometimes we have raw data that needs to be scrapped first and loaded into the models?
Yeah, it's a great question. I've had this question almost every time. We've done this webinar about 10 times now for societies around the world. And one of the questions people always ask is about external links. They'll say, I've got some commodity price data, or I've got some assumptions. I have 10 models, but I have some fundamental assumptions that I want to go into all the models. Maybe I'm building a model for a bunch of mining companies and I want to use the same exchange rates or the same commodity prices. I don't want to type them in every single time. So people will say, can I link all of my models to one central file that houses all of the commodity forecasts? Yes, you can, but it's dangerous. I will just say it as simple as that. Most model builders will discourage. They will recommend that we don't have external links. Has anybody here ever opened up an Excel file and you get a message and it says, hey, this Excel file is linking to other files. Do you want to update the links? The first thing that happens is you get nervous and you get a bit of a heart palpitation because you don't know what's going on. A lot of things cause all sorts of nervousness when files link. There's a lot of, in a lot of proposals, sometimes we've seen big organizations when they accept models with proposals, they'll say you're not allowed to have external links. The problem with external links is you must keep all the files open at the same time, because if you change the structure, you add a row in one and the other ones aren't open, then the links can kind of start linking to the wrong spots. My recommendation, what we do, is if you have to copy a bunch of commodity data or other assumption into a bunch of models, literally have a table on one file that has all your assumptions, and then have the exact same table on all your other files, and then copy and paste as values, but all of them together, not one at a time. It's very fast. It's a little more manual, but it avoids having external links. And I know sometimes there's a trade-off, guys. There's a trade-off between automation but having the confidence and having simplicity. So I'm not going to say we never have links, but you need to be extremely careful. Most often we prefer to avoid them. Thanks, Ian. I think we run out of time for questions now. We are slightly above time. That's fine. I think we wanted to cover as many questions as possible. Well, what we'd like to do, Binod, why don't you send us, here's what I'd like to do. Why don't you send us all the other questions? What Julie and I were going to do is, guys, what Julian and I will do is we will write up the responses and we'll send back a document to Binod and the CFA Society. And then you will receive in the next week or two all the answers to all the questions. And once you've got the answers, you'll take a look at them that way. Finally, I will say, don't forget though, if you're always welcome to reach out to us. If you have questions, you can see we get very excited about modeling. It's such an important skill. I hope you can use some of these ideas, but don't be shy to reach out.
I mean, you guys can write directly to Ian. That's his email address, guys. Yep. ian.schnoor@fminstitute.com. Yes. So that'll be faster and better for you. Thanks so much, Ian. For everyone else who thought Ian covered a lot, which is true, and quite fast because we had to. We're going to have, we're building an ecosystem of financial modeling solutions, training solutions. The first was CFI, now the FMI exams, and we're going to probably have some live online training over the next few months. So watch this space. You'll be getting emails in your inboxes soon about some interesting tie-ups. So don't worry if this was fast. In any case, you can watch the recording on YouTube, which will be uploaded a week from now. It's fine. But in case you want to deep dive into financial modeling, the CFA Emirates is going to offer you something quite soon. Thank you again, Ian. Thanks for everyone to attending. And please fill in the survey that you will get immediately after this webinar. Your feedback is very important to us. Tell us what you liked, what you didn't like, what can be improved, and we will try and tweak it as much as possible. Thanks for Julian at the back, organize all this. Thanks to FMI, to Savan Azhar from CFA Society Emirates, and to all the attendees. Thank you and good evening.
And thank you all.